took a look at the funding report for last month in March because for the online private markets, we saw somewhat of a quieter time in February, but March was actually a pretty good uptick. I can pull up the chart here as we share it. There was roughly $44 million raised, which was a pretty significant increase. I think it's a 58% increase month over month versus February, and also a year over year increase. These monthly funding reports, there's some awesome new visuals that we've been experimenting with so that you can also drill down by platform and take a look. So here shows all of the capital that was raised in the month of March 2025. You can see, wefunder, dealmaker, net capital, equifund. And within each of those, you can drill down. And for example, equifund had Eagle Energy Metals Corp, which maxed out their raise. So they raised $5 million. You could take a look at net capital, for example, and if we click on that, you can see that Avadain was a big raiser on net capital and also MagFast. So all of these let you drill down further into the King's Crowd data. I think it's really interesting. But to your point, Legion M, Misa Robotics, this is another serial issuer that's on there a lot. So raising on Dealmaker, looks like they raised $5 million as well last month. And then obviously wefunder, Start Engine, continuing to be strong performers. For the month of March, Pirouette Medical did raise out their maximum of $5 million as well. Now, one of the things I thought was interesting, and where I want to get Scott's opinion, is we saw this uptick in March. However, I think as anyone who isn't living under a rock has been aware, there's been a ton of volatility just between the news and the public markets, the tariffs, and everything else that's going on there.
It's also funny. First off, I love this chart. I think it's interesting when you look at the chart, the type of companies that raise via crowdfunding successfully. And it just seems to be so clearly like not just startups, but almost like alt startups, like medical, robotics, science, big concept stuff, but just as like a super interesting observation. So with that said, I think the public market stuff, I said this on my podcast yesterday or whenever I pushed it out, invest with your eyes and not your ears. There's so much noise. It's almost like the individual people, whether it's the talking heads or the hedge fund managers or whatever, they all want to push people to do one thing or another.
I think it is this psychological barrier, right? Where as long as your stock isn't trading and you check it every hour of every day to say, oh, it's up 5%, oh, it's down 10%, that wreaks havoc on just the human mind and the psychology. And by having in the private markets doesn't mean that your companies aren't going to be going through the same ups and downs, but by not seeing it every day, I actually think that helps me personally be more invested for the long term, right? Like I'm not thinking as much about like the short term returns of my portfolio. It allows me to focus more on the longer term by having these things that are liquid. So I know liquidity is often one of the things that's cited as risks for investing in startups, but I actually see that as a bonus sometimes for my own portfolio. I don't know how you feel about that.
And I agree with that. But I also think that like just because you can sell immediately, you start to act like panic seller, panic buyer. I totally agree with you that we are way too reactive. I think retail investors, and I don't mean this as a slight, I think we're ready for the next wave of investments. And I personally, if I could pick it, it's something safer. I think the everyday investors need to start putting their money in stuff that grows, benefits from compound interest, but ultimately doesn't tank like every 6 months. There's not like a 20% drawback. The reality of it is, don't get emotional about it. I know the first couple of times it's hard to see your money go to zero, or not even zero, but go like the 30% down. You're just like, oh, I can't sell now. You've got to stay the course and not listen to talking heads. You've got to make it about what the numbers tell you. If you're investing, this is so simple, but like the Warren Buffett 101, and this extends to startups and it extends to private assets. If you just pick things that you believe to be good companies, fundamentally strong companies that have a product that people love and that they will need, it's a good investment. I don't care what happens on Monday, April 7th with the stock. It's a good company and it'll be around in 10 years, or it's not. And you're making, then you probably need to hire a money manager.